This video is the part 2 recording of the live session entitled Don't Lose the Easy Marks by Sheila William. The PASS ACCA AAA series is brought to you by Sheila William. She has been teaching ACCA for the past 30 years. She has helped thousands of students pass the challenging ACCA papers.
We are looking at the government grant for a bit, and there are two different scenarios that we're going to have a look at. Okay, scenario 1 and scenario 2. So this is scenario 1 and this will be scenario 2. And we are following the same exam technique here. We've got the observation that's from the scenario. We've got the materiality. You have got the accounting treatment. You've got the risk that management, and we've got the impact. All right. So let's say that grant 2 million received for something, okay, and that something is going to be done in the future, okay, and the exam question tells you, right? That's what the exam question tells you. Are you able to see that? Should I make that slightly bigger? Okay. So can you see here that grant has been included in other income, and this one is for the future, and that's wrong, isn't it? Yeah, it's wrong. So the next thing we're going to do is calculate the materiality. And let's say the PBT in this question is 30 million. Okay. So grant 2 million is 6.6% of profit before tax and is material. If you do that, you have got 1 mark inside there for materiality. Remember, materiality marks are maxed out at 3 for audit risk ROMM questions. Now, can you see here that they did something wrong? They included the grant excuse me, that relates to a future expenditure in other income. That's wrong. Okay. So when it comes to the accounting treatment, I will say they should not do this. Because the client did something wrong, yeah? Okay, quick question. How many marks would you give me now? Okay, I've got a question here from Mandunga. Will you be penalized if you don't tell the story? I have always told the story. I've kept it simple, and now you've got the copy paste function as well. The reason is because this briefing notes is prepared for the partner, right? And if you are a partner and you're receiving it without head or tail, the poor partner is going to be a little confused, all right? So marks are not given, but you know what? It's professional to tell a bit of a story, okay? All right, so I was asking you the question here. How many marks are you going to give me? Seriously, 0, David, Isaac? 1.5, you're so nice. Now, every one of this, materiality is 1 mark, accounting treatment is 1 mark, risk is 1 mark, impact is 1 mark. So for this one that I've written down here, how many marks would you give me? And Isaac and David are absolutely correct. It is 0. Why? Because you have said what should not be done. You have not said what should be done. All right, so it's 0. So how do you make that into 1? So you have to put this down. Why do you have to put this down? Sorry, there's another color. You have to put this down because you have to deal with that. The question tells you that the client did something wrong, and we're saying you can't do that. All right, so what should be done? Now you'll get half a mark. Why? Because the story is not complete yet. So we've got half a mark inside here. Excuse me. Okay. So this one is when the money is received, but the money is not going to stay in deferred income forever. So what are you going to say? So I've got another should inside here. And that should is that we're going to transfer that money to other income as and when that future expense for which the grant was given has been expended. So that's the matching concept, isn't it? Right? So then you have got risk here. Risk that management. So what are you worried that management will do here? Can you put down in the chat? What should management do? A risk that management, what are you worried? There's one mark inside here, you know. No, it's not continue to recognize deferred income. Deferred income is correct. Okay, continue to recognize it as other income. Can you see here? Grant has been included in other income. So risk that management. They continue to leave it there. That's a risk. Can you see that? Yeah. And I get 1 mark for that. And you have got consequently. So I know typing this takes a little bit of time, but you know what? If you copy paste all of that at the start when you're building your framework of your answer, you would have all of this done. Then consequently, then all right, I get another 1 mark inside there. Okay, so that they would continue to do the wrong thing. So what was the yellow one that they did wrong? They included in other income. We're in the accounting treatment, we're saying we should not do that. And then we also say what they should do. And in the risk is that they continue to ignore IAS 20 requirements. Of course, don't mention that, mention exactly what they've done. Risk that they continue to leave the grant in other income. Consequently, what would be the case? Right? Okay, so that's the first scenario. Are we all okay so far? Yes. So here you have a scenario. Okay, good. I'm just looking at the chat to see if everyone is okay. All right. So here is a situation where in your question 1, the question mentions what the client did wrong. So if they've done something wrong, then you start off by saying should not. Risk that they continue to do the wrong thing. 1 mark there. Get this right. Okay. All right. Now let's talk about another situation here. Government assistance. Okay, government assistance can be like in the case of maybe some marketing help or any other advice or something like that. So there IAS 20 is very specific that if the assistance given is in the form of something tangible like land, then you can impute a fair value to it using the principles in IFRS 13, as long as there's observable inputs. But if the government gives you assistance in the form of advice, which you cannot put a fair value to it because it's not something that is traded in an active market, then you cannot put a value to it. All right, so assistance in the form of free land, if it's assets, or a free lease, no payment, you can impute a fair value based on the rules in IFRS 13. But if it's advice, because there's no market, there's no active market for advice, is it? So if the client imputes a fair value to it, then you will, that would be wrong. Or maybe they give you a free license to do something. Of course, if that license, other people can also buy that license from the government, but they gave it to you free, then of course, you can compare it with what other people have paid. So if other people have paid 100,000 for that license, then of course the fair value would also be 100,000 for that license. But if, let's say, the government has given you a license to go and cut timber on top of a remote mountain, and they give you free of charge, and you want to put a fair value to that, how would you put a fair value? You don't have anything to compare it with. Yeah? So be careful with assistance. Examiner has never touched assistance up to now. All right. So let's go to the next one. Same story. And that's all there is in the question. They've not mentioned anything at all. So of course you can't put in the second line because the exam question does not mention it. But are you going to calculate materiality? Now here, why do we calculate materiality here? The reason is because they told you it was in other income. Other income is in the SOPL, right? So your materiality calculation has to be relevant. If you divided this figure by total assets, you won't get any marks for it because the grant is not sitting in the balance sheet. So how can you divide it by the total asset figure? So your materiality calculations have always got to be relevant. However, let's come to the right-hand side. Did the examiner tell you where it is sitting inside? No. So you can either compare it with the profit before tax. Hang on, let me just copy the whole thing. Yeah. Okay, you can either do it that way, or you can say is how many percent. So let's just put some figure. Let's say the total assets are 400 million. Okay, that'll be 0.5% of total assets. And of course, it's not material. Okay. Now, what if you had put that down? How many marks would you get? Anis is saying 0. Anybody else? My calculation is correct. Total assets is 400 million. Amy is saying 0. Anybody else? David is saying 1. Jamia is saying half. Akshat is saying 1. The answer is 0 because it's not material. ISA 315 requires you to look for things that are of material misstatement, not immaterial misstatement. Then you're not answering the question set. Material misstatement. Now, we're not looking at the old questions. We're looking at the current question. The current question, the examiner wants you to think about materiality. Risk of material misstatement or audit risk is the same thing under ISA 315. Look for material items. If it's not material, do not even put it into your answer. This is not like the old answers. Old answers, even if it was not material, you'll still put it in and you'll still get marks. You won't get any more marks already. Okay. So here, I will not put this down because I will not get any marks for that. I'll only put the first one down. But you know what? The exam question did not say whether it's sitting inside the P&L or balance sheet. Then you choose. But when you choose the one that has got drama. Make sure it's relevant and make sure that it's got drama as well. Right? I always tell my students that when you calculate materiality, make sure that the calculation is relevant. Relevant means like this, see where it is sitting first. Yeah. Of course, in the second scenario here, we don't know where it's sitting because the examiner did not tell us. So we've got a choice. So relevant, it must be accurate. Oops. It must be accurate. The calculation must be accurate and have drama. It has got to be the bigger figure. It has got to have impact because you're answering this question under material misstatement. Okay, so the second one, it is not material. Not material, you won't get any marks for that. Okay, so when you want to write the one on the right-hand side, what would you write? Would you write the first one, that it should not be included? No, because that one is to do with the mistake made by the client. So then I would put this in here. Are we all okay so far? I would put this in here. Exactly the same. I'll leave that out. Okay. So now let's go to the risk. What could be the wrong thing that they have done? So instead of saying that they continue to leave that in there, risk that management. Oops. Typing has got wonky. Okay. That they have recognized the grant where. Okay. Now you've got to be very careful whenever you use the word recognize. Please be explicit where you are recognizing it. If you just use the word recognize without specifying where you have recognized it in, you will not get any marks for that. And this one will be exactly the same on the side. Okay, so I'm showing you how the wordings will be like if the question specifies the wrong accounting treatment and when the question does not specify any treatment. Yeah, practice all of these things in this next 1 week. Yeah, I'm just showing you how not to lose marks. So gaining marks is one thing, but don't lose unnecessary marks by putting that down and saying that it's not material. Okay, or here, when they already told you it is in other income and then you go and calculate it based on total assets, the examiner says that's totally irrelevant. It's not even inside the balance sheet. Okay, so be very careful. So remember this rule here for materiality calculation. Calculations must be relevant. Calculation must be accurate and have drama. Now listen very carefully now. We are dealing with question 1. Okay, we're dealing with question 1. Question 1 always is a planning question. We're always looking at where it is sitting in at the moment. But when you come to the finalization of the audit, we're still going to calculate materiality. Right? Then it is slightly different. Okay, let me clarify that. Where it is now. Okay, can you see the difference here? So you have got to make a distinction whether you're doing a question 1 or whether you're doing a finalization question, you know, like implications for the audit report. Then we are always dealing with the audit adjustment that needs to be made. So we're not looking at where it is sitting in at the moment. We're looking at the audit adjustment. So in the audit adjustment, we're always going to debit something, you're going to credit something. All right. So if you're debiting the P&L, divide that by PBT. If you're crediting it to the balance sheet, then divide it by the total asset and then go for the one that has got drama. So the definition of what is relevant is slightly different for question 1 and for finalization. So this is where students get a little confused because sometimes we're calculating materiality based on the audit adjustment. Sometimes it's based on where it is sitting now. Are we okay? So hopefully that clears things up a little bit. So when you're talking about question 1, it's a planning question. In a planning question, there are no audit adjustments, you know. Why doesn't my color want to go? Okay. All right. Are we okay so far, guys? Does that make sense? Right, so Kyril is saying yes. Anybody else saying yes? Okay, Christine is saying yes. Okay, good. Nuhu and Amy and David. And so be very careful in the exam, yeah? All right, moving down a little bit. Okay, so this is a marking scheme that we're already familiar with. The examiner's marking scheme tells you that for audit risk, there is 3 marks. Unless otherwise indicated. Sometimes they do give you more than that, but we will never know because we don't have access to the marking scheme in the exam. So materiality marks are maxed at 3. And you've got 1 mark for the accounting treatment, 1 mark for the risk, and 1 mark for the impact. So when you have got the materiality calculation, the total marks here are 4. All right. But you can always augment your answer with this blue. Remember, we used blue just now for the analytics part of things. Maximum is 2. So if you're going to bring in analytics inside here, just make sure that you adjust your budget of marks because otherwise you're going to be writing too much. Are we okay? So please take that into consideration in your budget. Okay. Now, I want to explain a little bit about this. Audit risk is 3 marks. So supposing you are talking about grant received, the one that we did just now. All right. And when you're dealing with grant received, there's how many marks you get just now? 4 marks, isn't it? Because we had 1 mark for materiality, 1 mark for accounting treatment, 1 mark for risk, and 1 mark for the impact. So actually, the ARI here is 3 marks plus 1 mark for materiality, yeah? 1 mark for materiality. Okay. Now, sometimes in your exam question, the examiner will say that this grant is given on condition. So whenever you see the word on condition, then we are going to be thinking about the grant repayment, right? Then you're going to say that if it is probable to be paid back, if the condition is not met, then we're going to make a provision. But if it's only possible, then it will be a disclosure note risk that management may not have considered the probability or the possibility of the conditions being met. But here is where you've got to be careful. For a follow-on point, let me just... Okay, this is a follow-on point. That means your main point is this one. This is a follow-on point. Did you know that your follow-on point here, you would only get 1 mark? So when you're doing the budget here, don't budget for the follow-on point because you're not going to get 3. You're only going to get 1. I tell you what, after this webinar, go and have a look at the marking scheme and go and see whenever they say grant, how many marks are they going to give you? They're only going to give you 4. Where does the 4 come from? Let me show you. The 4 is from here and from here. That's where you get the 4, because the marking scheme tells you that the marks for materiality are separate from ARI. Go and have a look at the marking scheme. All right. So the 3 marks is here, 1 mark is here. In the marking scheme, you'll see it as 4 because the materiality marks are not considered. So what I'm saying here is don't be too eager to put down the follow-on point. Never mind about the grant repayment. No matter what you're going to write, you're only going to get 1. Or if you want to write very, very quickly, super quick, and get that done. Let's try another one. Revaluation of property. So usually the scenario here would be on the area of selective revaluation. There'll be a dollar value given. How many marks would you get? This is what you'll get, assuming that you're still within the materiality maximum limit. The follow-on point could be on the area of depreciation. The depreciation should be based on the new revalued sum and not the old one. Risk that management will continue to depreciate the property using the old value. Consequently, then whatever. Okay, you know what? She's only going to give you 1. Be careful. Foreign payable and purchases are separate because one is they're accounted for differently. So if the accounting is different, then it's different. That's not a follow-on point. Because the purchase transactions, there's no 2 marks per point after 3 marks now. Okay, so let's say this one is all with the ARI, okay? Now let's say you are putting in that point. You are putting in the point on internal audit or corporate governance or on initial engagement. That will all just be 111. But initial engagement, you got initial engagement opening balance, initial engagement relating to detection risk, that's 1 each. So if you're putting deferred tax, okay, now deferred tax by itself. So sometimes what will happen is that the examiner will talk about the revaluation. And from the scenario, it looks like they did not do anything wrong. That means they got 4 pieces of property. All 4 have been revalued. That means there's no revaluation issue anymore. Then you can talk about, try and see what is the issue in the question. Usually the examiner will say that management have not accounted for deferred tax because they are not planning to sell the building and therefore they feel that the gain is not going to materialize and therefore they've not accounted for the deferred tax. Then of course your point will be on deferred tax and deferred tax will be here. Okay, but if you put down deferred tax here, if you go and look at the marking scheme, there's no separate mark for deferred tax for revaluation, you know. That means if you put down deferred tax, then you better not put this down because there won't be any more marks left. You can't put down 2 follow-on points. If you're going to put down follow-on point, limit it to 1. But you know what? The effort made to make a follow-on point is just too much for so little marks. Okay, so for this one, if you're going to put down the depreciation, to get that 1 mark, okay, to get that 1 mark, what do you have to do? To get that 1 mark, this is what you have to do. To get this 1 mark, this is what you have to do. Isn't that too much effort? You go and look at the marking scheme, study the marking scheme. Because we're talking about the risk of mature misstatements. So if you don't bring in the risk and the impact, then just putting down the accounting treatment solo, sitting down by itself, the marker won't know to make head or tail out of it. Can you see that? So don't be so quick to put on the follow-on point. If you run out of points, yeah, put in a follow-on point. The good thing about the CBE, you can always make space and add stuff in. But I would suggest that you go for the initial mentioning of the item. Don't go on to the follow-on point. Similarly, you have got the development costs here. Yeah. Development costs, you have got that. After the development cost, it is normal to talk about the amortization, but you go and look at the marking scheme, see whether she gives you any more marks for amortization or not. She doesn't. Or if she does, it's a Christmas present, because that's not what they normally do. So if you go and look at the marking scheme for development cost, there will be 4 marks. How does 4 marks come about? This one and this one. 4 marks. Are we okay? All right. So the lesson here is this. Follow-on point is not a very efficient way of gaining marks. Of course, if I'm in the audit firm, I will definitely have to consider that because that's part of my job in the audit firm. Here, we are just going after the marks. That's your objective. Marks, 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 marks. We've got limited time. Therefore, I think that you should be efficient in your mark collection process to get the most amount of marks in the least amount of time. Are there any questions? I tell you what, after the webinar, just go and have a second look at the marking scheme again. If the examiner deviates from this, it is a one-off thing. Sometimes, like here, she says, audit risk is 3 unless indicated otherwise. So sometimes she might give 4, especially if, let's say, it is a more complex thing, maybe on the area of forwards, or maybe on the area of share option, or maybe on the area of assets held for sale, then maybe she would give more, but usually no. Okay. So the purpose of today's session is to show you where you can get marks, how you can stop bleeding marks and wasting time. Of course, when I do it in class, of course, I show them how to do the follow-on point, but in all the mock exams, they usually don't do this. They know the marks are here. Okay, but of course, you run out of points, please put down the follow-on point. Okay, but usually in question 1, there are lots of points inside there. It's very rare that you're going to run out of points. Do we have any questions? Have you heard of this before? Are we all okay? Okay. So David says, okay. Anybody else? Revenue recognition using, oh, you mean the COPA, the 5-stage model? No. We're not going to put all of that down because in the scenario, you need to see which part of COPA is problematic. It cannot be all. So you're going to say that revenue should be recognized when performance obligation is completed. Then you're going to say, in this case. So even when you're talking about the grant here, we are talking about what is happening in this case. Always relate it to the scenario. Always relate it to the scenario. Question 1, is it possible? Question 1 is on non-profit organization. I don't know. I've never seen one before. I've never seen one before, but it's not impossible because if you look at some charitable organizations like Oxfam, for example, they handle billions of dollars, right? So that's always a possibility. But in a charity kind of a question, would there be management bias? Yes, because they would want to manipulate their figures so that they can get further funding from other organizations. So management bias would still be in there. But I don't think so. It's never come up before, so I wouldn't worry too much about it. If yes, no. Accounting-wise, it's still the same. The examiner is not expecting us to use any different accounting standards. Accounting standards is the same. Even if you have got a charity, if you have got an obligation to pay damages, then you better make provision for it. Yeah, it's the same. No. Don't die. Okay, don't die. All right. Just use your same accounting policy principles. The examiner cannot deviate. It's impossible. All right. So Please, nobody dies. Okay. All right. Now let's go down a little bit here. How do we find points in an audit risk question? So earlier we talked about business risk. How do you find the points? We're looking at the weaknesses and the threats. Then we're using ISA 315 by looking at the conditions, circumstances, and events, and we're looking at their actions or the inactions. So if your competitor is coming up with a new product, I'm going to say that if we do not come up with a newer product, we are going to end up losing the market. Okay. Right. And then we looked at how to write business risk answers. We looked at Audit, and I've also explained to you how we make use of analytics to augment your answer so that you can get marks faster, so that you don't have to write so much. Okay. All right. Now, all right. So here, how do we find points in the exhibits here? Okay, the audit risk. The way we do that is this. Because of the prioritization of risks, always go and look for the dollar values first. Okay, the dollar values. The examiner knows that we are automatically going to look for the figures with a dollar value. And recently what she's been doing is that she's not given us the financial statements. She's given us some exhibits, but not the financial statements, because in the financial statements got lots of numbers. So this one, she limits it to a few, definitely 3, because she got 3 materiality marks, but she doesn't give you so many. So what do? Then when she tells you the story in the exhibits, look for things with accounting treatment, meaning that you can relate it to an accounting standard. Like just now for the government grant. We don't have to put down the standard name. So look for anything that relates to a government grant. Are we okay? Now, if you cannot relate it, I mean, you should be able to relate it. Okay, but another clue down here, if let's say you could not see the accounting treatment, sometimes the examiner will say during the year, something big happened. All right. Now, if you go and look at ISA 315 revised, they talk about this word changes during the year. Changes during the year is the same as during the year. Okay. Then we're going to look for areas of significant risk. Then we are going to look for revenue recognition items. Because ISA 240 requires you to presume that there's fraud in revenue recognition. So this is what we're going to use in our exam. To help my students remember, I've just put it into the form of an acronym, DADS R. Okay. Now, you've got the area of significant risk. Please go and have a look at ISA 315, the video that I was telling you about. And here I have got an acronym called SUCS R. I know it's lots of acronyms, but I'm sure you would know what these stand for, like on the area of subjectivity, uncertainty, change, complexity, and susceptibility to management bias and related party transactions. Okay. I prefer using acronyms because it tells me that I need to know 3 things here and 4 things here and 5 things here and 7 things here. So it just helps me a little bit. All right. So if you've got perfect memory, then you don't need any one of these memory aids. And memory aid is like it's like a wheelchair. While your leg is broken, you make use of the wheelchair. But once your leg is okay, then the DADS R is automatically inside there. You don't need a crutch anymore. Okay, so it's just a temporary thing while we learn how to handle things. So this is what we're going to be looking for. Okay. Now, there are other things that you need to watch out for in this scenario. Okay. but it's not really a separate point by itself. We would look to see whether the company is private or listed, because private or listed, you're bringing in management bias coming in, but that's management bias is this one. Susceptibility to bias is already there. Then we have got whether the client is new or old, because if it's new, then we've got those 2 marks there for initial engagement. If it's an audit risk question, you know, the one about detection risk and the one about opening balances misstated. If it's old, then of course you will not have that. And then you need to see whether it is before the year end or after the year end. Question 1 is always before the year end, but some of the older questions, some of it was after the year end. So the reason why we want to look at this is more to see whether it's projected figures or not, because if your question 1 is before the year end on 1 July, and if the year end is September, then under the P&L figures, you want to see that it is projected. That's why we have that. Okay, so, but how you find the points in the exhibit, this is how you would find the points in the exhibit. All right, so maybe you use another method. Okay, but this is the method that I use. So it's very easy. So if you're stuck in the exam, look out for the dollar value, because we can calculate materiality there. If your accounting standard is weak, just look for the word during the year. They will always tell you during the year this happened, during the year, or after the year they're going to buy over a subsidiary. Yeah, during, after. So that one helps. Okay, the areas of significant risk. I would especially look out for related party transactions inside here. All right, the rest of it, the sucks inside here is all covered somewhere inside here lah. I wouldn't worry too much about it. For the dollar value prioritization, I put it right on top in my answer so that I can get 4 out of 4 on professional marks. And professional marks are so easy. If you're going to get 3 out of 4, that's really very sad. So don't do that, okay? And on the area of revenue recognition because of that. Are we okay? All right, so we finished that. So we finished sleep. Sleep is so important. I put it right on top. The reason is because when I was marking the mock 2, some of my students' results were horrendous. And I was like, oh, what happened? And when I talk to them, it says not enough sleep. It's proven, okay? Time management in the exam, make sure that you know how to calculate the budget, dating convention so that you know whether it's before or after the year end. Professional marks have shown you how to do it, how to get the easy marks using analytical procedures. Yeah, and show you how not to waste your marks with the should not. Yeah, so if they've done something wrong, you put should not, you better put the should down. Should must always come in. Should not alone has got no marks. Yeah, we had to look at exam technique for finding the points in the exhibit, exam technique for writing out the answer for business risk and for audit risk. Now we want to look at time savers. We already done some time savers, but the time savers just now I told you was for the business risk. Remember we said highly likely and impact, copy paste. Yeah. And for the audit risk, the risk that management and consequently copy paste, you save so much time. I want to look at question 1. So I was thinking, what do I do? How do I plan question 1? Question 1 nowadays is so massive. There's so many exhibits. So I was thinking, and I came up with this acronym called EFAST. So when you're looking at question 1, go to the email. That's the requirement of the question. We always look at the requirement anyway. Look at the requirement. And after you look at the requirement of the question, which is the email, straight away plan the framework of your answer. Remember, you copy paste the email into your workspace and make sure that you've got the headings, the subheadings, and then you've got the framework. You copy paste all the repeat words that I told you just now. Yeah. And plan your answer. So when you're talking about planning the answer here, we're talking about this, how many marks you're going to get from, yeah, always plan because we don't want to write too much, and always think about the marks that you're going to get from your analytics as well. Are we okay? Yeah. So first email, build your frame, plan your answer, then straight away go to the analytics. The page with the KPIs, the page with the financial, why do you go there? Well, one reason is to do the analytics, the increase in revenue, decrease in cash, increase in operating expenses, monthly operating expenses. But there's another reason why we go there as well, and that is to look for the benchmarks. So the benchmarks that we're talking about here is revenue and PBT and total assets. So what I normally do for these is that I go to the exam question, I go to my page, and you've got 4 highlight colors. I will always highlight this in green. You've got to be careful here which profit figure that you highlight in green, so that I always know what figure to divide it by. I don't get lost. Then only I'm going to go to the scenario. Yeah. And after I go to the scenario, I can fill in my plan. So I will know what point to put first and what point to put second. Then only after that, I will type out my answer. That works for me. I don't know what works for you. Try it out by yourself and see whether you can find your way. The problem here is that at this stage, you have already practiced all the questions already. It's very difficult for you to know whether this one is going to work because you've tried out all the questions and you know what to do. But when I got the pale question for the first time, I'm looking at it without eFast, I would have been lost. Okay, so this one just gives me a map of where to go to. All right. Okay, great. Okay, so we've got that. Are we okay so far? All right. Now, I know I've got 2 more points here, but I've got a little bit more to do with you. My mind has got blank in the exam. Has that happened to anybody? Has that happened to anybody? Can you put in the chat? It's happened to me. Sometimes it is momentarily, especially when you open up the question and the natural reaction is like, die, die, die. In Malaysia, that's what we say, right? We don't really mean die, but that's the way we react. Okay, like, oh my goodness, you know. So what do? Calm down. Question 1, you won't die. Question 1, your mind cannot go blank because we see the same kind of question 1 every time. But when you come to question 3, you might go a little bit blank. All right. The way to do it is this. You have got a scenario. The scenario will have some stories inside here. Okay. So what you do is you take that story and you put it down inside your answer. Okay. So management has done or something. You just take that and you copy that and you put it down here. Okay. So this is your observation. Observation is always from the question, you know, like Omari, you've got observation. Put it down. Based on whatever that's happening, make a comment. And you're going to say, I mean, look at it. Look at it. It's in English. Of course, not this one. This one is, I don't know what language, but make a comment. This does not make sense. This is odd, or this shouldn't have happened. Yeah. And then, so you make that comment and then you explain why you made that comment. So it doesn't matter which question you're talking about, other than audit procedures, of course. Yeah. Just follow this method. Observation, comment, why you made that comment. In the worst case scenario, you'll get half a mark for it, but it's a lot better than not writing anything when you're lost in the exam. Always use this. Observation, comment, why you made that comment. I don't know what the comment is going to be. I suppose it depends on the scenario, but remember, your mind has gone blank and you don't know what to do. You don't know what exam technique, you don't know what to do. But from what you can see, this one sort of doesn't make sense. And you put it down. Worst case scenario, you'll get half a mark. That's a good way to earn some marks. All right. And a lot of the time you'll be right as well. Okay. So half a mark inside there. So don't get worried when your mind has gone blank. Just follow this exam technique here. You cannot go wrong. Okay. Make sure your mind is not blank all the time, yeah? All right, so now we're coming to the last part, dealing with exam anxiety. Now, there are a few tips here. So those of you who are in the WhatsApp group, I will post this inside here. Yeah. Be prepared. So if you've got exam anxiety before the exam, the best way is to be prepared, to get ready. So if you're frightened of the lion, be prepared for the lion. Bring a gun along with you. Yeah. If you're afraid of the lion and then you know the lion is going to be there and you don't bring a gun, then the lion is going to swallow you up. So be prepared. That's the best thing that you can do. All right. Another thing is to get a good night's sleep. Remember, I was talking about the sleep. It reduces the stress level. Then you're less likely to go blank in the exam. I cannot overestimate that. I mean, we're in Asia. Okay. I don't know about you guys. I mean, some of you are, I don't know, all over the place. Yeah. And in Malaysia, it's normal. Your parents say that you're not studying hard if you don't sleep late. So it's quite normal. Yeah. If you sleep anything before 12 o'clock, they're like, oh, you lazy bum. All right. So, I mean, that's with Asian parents. And I think I was brought up like that. So when I was sitting for the exam, if I don't pull an all-nighter, I feel very guilty. But you know what? Maybe my parents did not know the harm that they were doing for me. And remember earlier, I was telling you this kind of problem does not exist with AA or P1. It's only with AAA. Maybe that's why the pass rate is so low. All right. So having a good night's rest will help to counter the stress in your mind. You cannot tell your mind not to be stressful. You are already stressful. Your mind has got a mind of its own. There's nothing much that you can do about it. The only thing is you can get a good night's sleep. Fuel up. There are a few kinds of foods that you can reduce stress. Bananas are very good. Nuts are very good as well, especially walnuts. Yeah, get to the exam center early. Have a positive mental attitude. This one is, yeah, it's good. Yeah. But I would prefer if you just tell yourself, even if I don't believe in myself, I believe in the exam techniques. All right. And you've already done what you can do. Go in with that. I've done what I can do. Some of you, it will be I've done my best. Some of you have not done my best. Some of you, your best is only in the last 2 days before the exam. All right. So you can't really say that you've done your best. Okay. So try and say, I can do this. Okay. But butterflies on the exam day are real. Just don't be frightened. Okay. Okay, David is saying, I'll go to sleep early, then my mind will automatically highlight the topics or the things that I did not do. There was one girl in the June exam, Sin Hui from Sydney, Australia, and she wrote in my review page, when the results came out, she passed. She says she couldn't believe that just before an important exam, she actually went to bed early, knowing full well that she's done everything that could be done. She was on the boot camp program and she got through. So it is possible that do everything that you need to. And remember, when you're going for the exam, you have to have a strategy for learning, strategy on the day of the exam itself. Follow the strategy. The strategy is the one that gives you the strength. You know that if you see an audit risk question, this is what you're going to do. This is how you're going to look for the points. This is how you're going to write. For a business risk question, this is what you're going to do to find the points. This is what you're going to write. If I see my question 1, I'm going to use eFast. Yeah, I'm going to look at the email. I'm going to look at the framework. Then I'm going to look at the analytics. Then I'm going to look at the scenario, and I'm going to type up my answer. So for every angle, I mean, it's just like you're going in for war, or you're going into the jungle, so that you know, if I don't find water, what do I do? If I can't find a place to sleep, what do I do? If there's a lion, around, what do I do? Plan for every contingency. Do that. You'll be good. Okay. And if you freak out in the exam, just begin. Sometimes it takes time for you to warm up. Just begin. Even if it's just doing the eFast bit, yeah, It keeps you busy. Never mind about what other people are doing. I mean, if they are typing away, forget it. I don't know what they're doing. They're not following the timing. Time management. Remember, for question 1, there's 30 minutes of time management for planning and doing e-fast. Watch the clock from the beginning. Make sure you've got a big watch, yeah, and put it in front of you so that you stay on time. And then if in the exam itself, normally the butterflies will only be there in your question 1. Then after that, you should be okay. Should be okay. Make sure you practice properly. All right. Now, before we go off, I just want to look at audit reports. Okay. Can we just do that? So I've done everything that I wanted to do today. Okay. But this is this area that constantly students have problems with. Okay. So you get an implications for the audit report kind of a question. Just have some lines here so that I can write. So if we're thinking about implications for the audit report, kind of a question. First thing you're going to do is you are going to think about the nature. Yeah. Then you're going to think about severity. And that would lead you to the opinion and the basis paragraph. I already told you that earlier. So I use the exam technique NSOB for my AA and my AAA people as well. It's so easy to get your 5 marks without waffling inside there. If you're not sure how this applies, you can always go to my YouTube channel and have a look at some of the videos inside there. I think there's I think there's about 4 videos inside there, implications for the audit report. Please go and have a look. All right, now I want to clarify something. Okay, I want to ask you a question. Okay. All right. So the story here is like this. The CFO is saying, we're not really sure the extent of the provision for damages. Maybe, let me give an example. Supposing your client has got a major factory, and because they built that factory, all the houses surrounding them, the people's houses surrounding them, have all been damaged because of the construction work of the factory, you know, the piling works and all that. And as a result of that, maybe there's been a landslide and all those houses got damaged. Okay, so you damage people's houses, you need to make a provision for that, you know. Yeah, there is a natural obligation. You harm people, you have to compensate them. Okay, so the CFO is saying, I'm not sure what the damages are really going to cost because we've got to deal with the land around the factory. We have got to rehouse them. I don't know how much that's going to cost. And he does not mention it in the financial statements. Okay. Quick question. Is this a misstatement or is this a limitation of scope? Come on, guys. Can you put down in the chat? So some are saying misstatements. Some are saying limitation of scope. They're unable. You ask the CFO and he says, I don't know. I don't know. Okay, I've got a combination here of the answers here and the answer here. This is a misstatement. Why is that a misstatement? He is unable to make the assessment true, but they have not mentioned the uncertainty in the financial statements. He should have at least put it down as a contingent liability. You should have put something down in the notes. You did not even communicate with the shareholder. That's a misstatement. When the CFO is unable to do something to put a figure in the financial statements, it's always a misstatement. Okay, let's change it slightly. Supposing the CFO is unable to put extent of the provision in for the damages, but a note included in the financial statements. Okay, now you as an auditor, what are you going to do? How does that impact? Remember, we are dealing with this kind of topic here. Note has been, He's like, I really don't know how much provision I'm going to make. So in a note to the financial statements, he's writing, I really don't know how much how much is the provision. Yeah, he could make a best estimate, but he's saying that he cannot make an estimate. He's saying, I really don't know. Okay. And in the note, he's saying, I really don't know. What do you have now? Misstatement, limitation. Come on, guys, put in your, okay. The answer is it's true and fair. There's no limitation and there's no misstatement. Unqualified. Why? Now, remember, when you're dealing with IS 37, in IS 37, of course, you can make a provision, you make a provision, but if it's a contingent liability, then you can put down the estimate, or you can also put down a statement that it's not possible to come up with an estimate. So you complied with the accounting standard. It's true and fair. How does that impact you? Emphasis on matter paragraphs. Very good, Stella. Okay, so we're going to have an emphasis on matter paragraph, provided. No, I'm not saying that management did not make an effort. They are unable to. From the scenario, the CEO is saying, I really don't know how to do it. Okay, I'm not going to judge whether he's made the effort or he's not made the effort. As far as I'm concerned, you have not provided a figure. But he's put down in the note mentioned in the financial statements, he's saying that we are unable to make an estimate. And that's fine. As long as it's made a note, then it could be an EOM paragraph for us, provided it is one of the items that relates to an emphasis on matter paragraph. So how would you know that it is an EOM? Okay, so Louis here has put down an acronym here. She's one of those in my boot camp. Okay, SUBREM. I love acronyms. Okay, so it is one of SUBREM, and it is so here, this acronym here. Let me just put that in pink. Okay, I'll explain what SUBREM is in a minute. Yeah. So the definition of EOM is something that is fundamental to the user's understanding of the financial statements. The problem is the students don't know what is fundamental. That's the problem. So if you go to ISA 706 on EOM, you will have 6 things mentioned. What are the 6 things that can become an EOM? One is a significant subsequent event, not just material, but significant. The second one is uncertainty related to the future outcome of exceptional litigation. The third one is where the basis of the financial statements have changed from going concern to non-going concern. R is revision of the financial statements after they have been issued. E is early adoption. Wow, somebody has copy pasted this from somewhere. David, thank you. So early adoption. And M is a major catastrophe that has and continues to have a significant effect on the financial position of the company, like this. Remember, we're talking about the landslide, and that's a major catastrophe. Are we okay? All right. Now, CEO is unable to assess, not mentioned in the financial statements. That's a misstatement. Let's have a look at something else. The auditor So here you've got another situation where the client says, or the CFO says, the provision for damages is 1 million, that's it. But when we go and do the audit, we can't find the evidence. I mean, we're not convinced that it is actually 1 million. So is this a misstatement or is this a limitation of scope? Can you put into the chat? Excellent. So this one is a limitation of scope. Everyone knows that. So can you see that there's two things? One is CFO unable. The other one is auditor unable. They are different. Keep that in mind so that you don't make a mistake on the nature. All right. Okay. So let me just draw a little bit. Oh gosh, it's already late. So you guys have hung on for so long. Okay. So this is a final session here. So if you look at the exam scenario and if you find that when you look at the nature and the severity of it, and if you find that the opinion that you have to give is unqualified and the marks are 5 marks, then it has to be that these items are either an EOM or an OI, if you're talking about other information, or a key audit matter. All right. How do you know it's an EOM? It will be one of these. How do you know it's other information? The question will tell you that this information is in the annual report or in a document containing audited financial statements. But how do you know whether something is a key audit matter? For a key audit matter, there is a 2-stage process. Very good. So we've got CATs. You know I love acronyms, right? So the first stage is this. You need to see whether the item in the scenario comes from a CAM pool. You know, like a swimming pool. You got a picture of a cat. Thank you. So CAM pool, this pool here would be the areas of significant risk. What is significant risk? Based on ISA 315 revised is SUX-R. Oops. SUX-R. Okay. Okay, that's the first stage. First stage is see whether it's in the CAM pool, whether it's a matter relating to significant risk. And the other one is a matter relating to auditor judgment. And the reason why the auditor has to use a lot of judgment is because management had to use a lot of judgment. Everybody's using judgment. That's the first stage. Second stage is we're looking for CAM CATs. CATs is an acronym. I'm sorry, there's so many acronyms here. I mean, you don't have to use the acronyms. I'm sure you already memorized them. Yeah, I'm sure you've already got good memory, but CATs is what I use with my students. So C is, it would be communicated. It's a matter communicated with those charged with governance. The second one is there's significant auditor attention. The third one is that that item must be treated correctly in the financial statements. That means it cannot be a misstatement. It's a misstatement. It will never be a CAM. Even if you communicated with those charged with governance, even if there was a lot of auditor attention, and even if it was this, as long as it was treated incorrectly, it will never be a CAM. It would be a misstatement. Okay. And the last one here would be that it is significant for current year. Significant for current year means materiality, that it's material, to do the calculation and see it's material. Now, recently, the examiner has been bringing in CAM CATs, but I want you to note that you may not have all of CATs. Okay, you might not have all of CATs, but look to see if there are some of the elements here. It could be a CAM. Yeah, sometimes the examiner does not mention this. Sometimes the examiner does not mention communicating with those charged with governance, but if you look at the scenario, you're communicating with the directors. Who are the directors? Those charged with governance. Yeah, those charged with governance are directors. So definitely in the scenario, there'll be a finance director hanging around there. So if you're communicating with the finance director, it means communicating with those charged with governance. Significant auditor attention simply means that there was a lot of auditing done, a lot of audit procedures. It was complex. Treated correctly in the financial statements and is material for the current year. So if you've got CATs, we probably have got CAM inside there. All right. Now, just one more thing before we go. Just one more thing. Yeah, just bear with me for a bit. Okay. Are there any questions? I know we are taking up so much time here. I know. Are there any questions? Just give me another 10 more minutes, okay? Okay, so we've got scenario 1 here. And I've got scenario 2 here. This is the last one that we're dealing with. Okay, and after this, you can go and sit for your exam. Okay. Oops. Let's give it a bigger. Okay. Right, scenario 1. Let's say we're still on audit reports, okay? So let's say there is provision for damages. Can both EOM and KM be in the audit report? Yeah, but EOM would be a sub-rem item. CAM would be in another paragraph that fulfills the requirements of CATs. Can it be both? I suppose it could. The standard says there is a possibility. Yeah. But for your purposes, the examiner will make it very clear that it's either EOM or KM. In the audit firm, because they have got access to consultation, you've got the technical partners there, it can be a little complex. Yeah. I'll give you an example. When COVID first started in 2020, AirAsia, their results were quite down, and EY came up. AirAsia is a listed company, right? And for the effects of COVID, they put it under an emphasis of matter paragraph. Even though their revenue was going down and their finances was down, it was not an MURGC paragraph. They categorized COVID as a major catastrophe having a significant impact on the current financial position of the company and continues to have a financial effect. So AirAsia had an EOM paragraph for COVID, the effects of COVID on their financial position. It wasn't an MURGC paragraph. So when I first saw that, I was pretty stunned. Yeah, CAM is for listed company, but it doesn't say anywhere in the standard that EOM is for private company. So AirAsia is a listed company, the auditors are EY, and they gave an EOM paragraph for that. Why? Because it fell under the category of sub-rem. Which one? M, major catastrophe. And COVID indeed has been a major catastrophe, hasn't it, on the financial position of companies and continues to have a significant effect as well. So EY gave an EOM paragraph, and that's fine. EOM is not just for private companies, it's for listed companies as well. As long as you have got sub-rem, you will have an EOM. I don't care whether it's a private company or a listed company. Sub-rem means there will be an EOM paragraph. KAM is mandatory for listed companies, but the standard also says that KAM can also be used for private companies where the partner thinks that it is the right thing to do, but it's mandatory for listed. So listed companies don't have an ownership of a KM. A private company can also have a KM. Listed company mandatory, and they will definitely have KMs. Are we okay? So you need to be careful here. If you go back to the standard, there's nothing in the standard that says that it is only for private companies. Remember, EOM came up first, KM came out later. So EOM has been used for private and listed companies. And the criteria in 706 is sub-rem. If you have sub-rem in your company, then in your audit, then you will have an EOM paragraph, and that's it. Nothing to do with whether it's private or listed. Sub-rem is the criteria. Are we okay so far? So the example given here for EOM would be Air Asia. Air Asia is listed, and the audit report was given by EY. All right, so I've given you proof of that. So here, the example here is that there is a provision for damages that is necessary. So now we're talking about implications for the audit report. Okay. Implications for the auditor's report here. And what does that mean? What does implications for the auditor's report means? It means that we are at the finalization stage. All right, so let's say, for example, now there is a provision for damages that the client does not want to make. Okay. The client does not want to make the provision, therefore, this becomes an audit adjustment. It will go into the summary of uncorrected misstatement. It's an audit adjustment. And in the audit adjustment, we are going to, in our summary of uncorrected misstatements, we're going to debit operating expenses. Let's say that it is whatever figure, all right? And we are going to credit the provision with the same figure. All right, exactly the same figure. Okay, so let's go to scenario 1. So let's say that here, the figure here is 20,000. Okay, let's just say that the provision figure here is 20,000. So how would you calculate materiality now? You can compare it with the PBT figure, because one part of the double entry goes into the P&L. You can also divide it by the total asset figure and divide it by the total asset figure, because this figure is in the balance sheet. Okay, so let's say you divided it by the profit before tax. And let's say the figure here comes up to 2%. Okay, so we know that there's a misstatement here, and we're calculating the materiality. So is it material here? Sorry. No, this one. Let's say, okay. So is it material? Can you put it in the chat? Yes, it is material. Very good. Now, I need to go one step further to find out whether it is pervasive. Is it pervasive? No, everybody agrees it is no, because it is only one item, right? Okay. And therefore, what kind of opinion are you going to give? A qualified opinion, saying that the financial statements are materially misstated due to non-compliance with IS 37. Okay, now let's go to scenario number 2. The provision here is, let's say, 1.5 million. All right, and let's say that the PBT here is 1 million. So is it material? Yes. How do you know it's material? Material by impact. Very good. So this one is material by impact, in that if you put through this adjustment, it will turn a profit into a loss. Everybody agree? Question now. Is it pervasive? Some are saying yes, some are saying no. Okay, let's come back here. Why did you say no in the first instance? No, because only one item, right? Okay, now let's come to the right-hand side. It's the same thing. I've only changed the dollar value. How many items are there? Only one. So is it pervasive? No, only one item. So it is not pervasive. So what kind of opinion are you going to give? You're going to give this. Okay, now let me explain another one. This is for the AAA exam, okay? Now, I'm calculating something against PBT. And in this company, there were 3 misstatements, okay? 3 misstatements. The first item we calculated, it was 6%, the audit adjustment. The second item that we calculated was 7% of PBT. And the third one was 8% of PBT. Okay? Now, is it material? It is. Is it pervasive now? So earlier we said that there was only one item, right? And here you got 3 items. The answer here is it is not pervasive, because the 3 items still do not represent a substantial proportion of the financial statements, meaning that this one item maybe in the P&L is affected, another item here, another item here. It is not cohesive. So even though it is 3 items, it's 3 is more than 1. So will that not be pervasive? The key here is this in the exam. Look out for this. Not so much whether it's 3, but look at whether they are mini 3s, mini, M-I-N-I. A bit here, a bit here, a bit here. Well, that's not called pervasive. It's 3, 3 is more than 1. Now, I want to show you something else. Cumulative effects. Yeah, it could be a little bit more, but it's definitely not pervasive, because the effect on the financial statements is like, it's like here and here and here. It's like spread out, sort of quite far from each other, sort of. Now, let me show you another calculation. Okay, now this is important. Okay, because sometimes in the exam question, you'll have 3, and yet when you look at the suggested answer, it's still not pervasive. And you're like, what's going on? Now here, the examiner will give you 3 scenarios. And the first item, when you calculate that against the PBT, okay, when you calculate against the PBT, it's 50%. It's a whopping 50% of PBT. And if you look at the second one on its own, it's 70% of the PBT. And the third one is like 80% of the PBT on its own. Collectively, of course, it will be massive. Is that pervasive? Yes. Can you see the difference here? This one here, yes, it is more than 1, but it was mini. I mean, of course, it's more than 5%. Of course, it's big, but it's mini compared to the one on the right-hand side is massive. Can you see the difference? That means when you add up the 3 parts, not only the debit part is massive, the credit part is also massive. So the mini parts by themselves, David is asking a question. This one will be qualified, because usually in the exam question, they will ask you for the opinion for each, or they might. This one will be qualified. This one will be qualified because it's more than 5%. We're comparing it with PBT, yeah. So more than 5% material, more than 5% material. But is it pervasive? No, because it is still spread out. But this one is still 3, but look at the effect of it. All right. So the important thing here is I cannot give you a rule. I can only give you examples to show you so that you can see the difference. But you will have to look at the individual scenario and make a judgment call and explain it to the examiner. Examiner will notice your explanation. Usually the student at this point will tell me, okay, when do you, that's right, David is saying, eeny, meeny, miny, mo. All right, catch the tiger by his toe. Okay, so here, students will usually say, okay, can you give me a figure here? Is it 20%? Is it 30%? Is it 40%? When do we move from the yellow to the blue? I cannot answer that question. I really can't. I'm sorry. I wish I could, but I can't. You have to use judgment. The most important thing for you in the exam is to make your justification. The examiner wants to know your justification. If you make a justification here that this represents a substantial proportion of the financial statements, the examiner might give you a half mark for that. Are we okay so far? I know it's complex, but this is a high-level paper. So it's not like in AA where it's really straightforward. Okay. But turning a profit into a loss is definitely material by impact. Yeah. If there are many unmaterial items, would that be qualified? Yeah. In the summary of audit adjustments. Yeah. So when you look at the cumulative effect of it, if the cumulative effect is material, then yes. You know, in the exam, we've got this question called matters to discuss with management. They would usually give you a summary of uncorrected misstatements that schedule with the 4 columns inside there. So individually, some of them may not be material, but collectively, yes. All right. Okay, so we have finished for today, and I hope today's session was helpful. We've done 4 hours. Can you believe that? All right. So does anybody have any questions here? Everyone is so quiet. Okay, is it possible to get the recording? Okay, so I'll tell Bosco to put it on YouTube for a couple of days. But Derek, I think you're in the WhatsApp group, right? Yeah. So those in the WhatsApp group will get the notification when it's up. So it'll probably be up tomorrow. I need to get Bosco's help to put it up. I don't know how to handle YouTube recordings. All right, so we're finished. So all the best to you. And please remember all the tips that I gave you to get the analytics inside. Make sure that you stop the bleeding of the marks. All right. And okay. And that's it. Wishing you all the best in your exams. Success only. All right. Bye-bye. So I'm still here. Yeah. Good luck, everybody. And do your best. All right. Bye-bye, everybody.